Good afternoon, everyone. David speaking. It's about 10 past 4 in the UK on the 20th of June. On VectorVest, the short-term trend of the London market is down. Longer-term trend is up, and it's been up since the 17th of April. And I'm glad to report that our very conservative, worry-free stocks haven't given up anything at all in this little bit of a sell-off. But folks, there is opportunity around, and out of one of my searches this afternoon has come a little company called Hollywood Bowl. And Hollywood Bowl, if I can just get rid of this for a second, it's trading at 224. Now we believe it's worth 263, up 7 pence yesterday, and I'll show you in a second a very nice candle as well. That was 3%. Now, the relative value is 1.45, and that means that we believe that this share will outperform a AAA rated corporate bond by 45% over a window of 3 years into the future. Relative safety at 1.07 is fair, and the trend at 1.17 it means it's going up. And when we put those three things together, it has a master indicator VST of 1.23. It's on a buy recommendation with a stop at £2.08. And we believe it's going to grow earnings next year at 27%, which is a reasonable clip. Pays a reasonable dividend, and we believe it's going to grow that dividend significantly. But the chart is really interesting, folks, and I'm going to pull up the chart, and there we go. It's in my normal notation. The candlestick chart speaks for itself. The green thick line is the VectorVest valuation, and as you can see, it's trading below the VectorVest valuation. And as I've said to you many times before, those of you that listen to these videos, the only way to make money in anything is to find the value of something and then pay less for it. Earnings per share is growing, and over the last year, earnings per share, in fact, has gone up significantly. Over the last 18 months, it's actually doubled. And as earnings per share went up here, the VectorVest program revalued the company. As you can see, folks, from a technical perspective, the share has pulled back to support. And at support, folks, it was actively accumulated yesterday and charted this beautiful outside bar. Okay, it's on a buy recommendation on VectorVest, and for those of you that are technicians, the stochastic is right down here in the oversold area below 20, and it's also showing reverse divergence with price. In other words, the price has made a rising bottom, but the indicator's made a falling bottom. A really, really good signal. So the other thing that's of note, of course, is that this old resistance has become support, and this trendline support and old resistance becoming support have made a confluence of support just here. There's also a fib level in there as well, so nobody knows what's going to happen next, folks, but and the general market is heading down. So if the general market were to turn and the short-term trend turns back up again, and VectorVest recommends buying safe undervalued stocks at this time, then Hollywood Bowl, I think, is something for you to look at. The VectorVest target is somewhere up around 260, and that would be a nice 20% move. Have a great trading day further. Bye bye.